40inbox.com here. So, how to get a perfect credit score. Number one, pay all of your bills on time. Late payments can have a negative impact on your credit score. Make sure to pay all of your bills, including credit card bills, on time. And this is actually one of the biggest aspects for getting a perfect credit score. Because if you are late on any of your bills, especially a credit card bill, that could have massive negative impacts on your credit score, and it might take you months, if not years, to actually fix that issue, right? Number two, keep your credit utilization low. Credit utilization is the amount of credit you are using compared to your credit limit. So, for example, say that you are using $1,000 a month on your credit card, but your credit card limit has like $10,000 on it. You're using a very low amount of credit compared to how much you actually have, right? So a high credit utilization can negatively impact your credit score. Basically meaning if you were to either reach over half of the utilization, so more like let's say that your credit card limit is 10,000. If you start approaching like over 50%, ooh, that's getting really bad. If you're at 70%, that is extremely bad. If you're at like 90% to 100% where you're maxing out your credit card, that is insanely bad for your credit score. Like, keep that in mind. And here's another perspective. Like, only put bills on your credit card that maybe you automatically pay every single month. Like, in terms of like maybe your subscriptions. So, for example, maybe only put like your Netflix, your Hulu, whatever monthly subscriptions that you pay for on your credit card, right? Like do like the small expenses on your credit card, but small expenses that you do every single month so that you still use it, but the utilization is so low that is never going to negatively impact your credit score. Don't apply for too much credit at once. Every time you apply for credit, it can have a negative impact on your credit score. Try to limit the number of credit applications you make. Now, when we say don't apply for too much credit at once, it's not just in terms of like a personal loan or a credit card. We're also talking about mortgages. We're also talking about auto loans. Like, the more that you get like a hard inquiry, like a hard search at your credit score, the more your credit score is actually going to get like chopped down. So you could end up being close to the perfect credit score, but then you start like applying for different mortgages from different mortgage companies, and that like 800 credit score now goes to like a 770, a 760, a 750, 740, etc. Like it'll just keep on getting lower and lower and lower. Next, check your credit report regularly. Make sure that the information on your credit report is accurate. If you find any errors, dispute them with the credit bureau. Now, this is also potentially a good reason as to why you want something like identity theft insurance, because you could have your identity stolen to the point where people steal your identity and start getting credit cards in your name, and they basically go default on those credit cards in your name. Like, that could ding your credit score. that could put you in a financial turmoil for years. But if you have like identity theft insurance, or maybe even I think potentially umbrella insurance, you might be able to at least protect yourself to some extent. And last one, use a mix of credit. A diverse mix of credit, such as a mortgage, a car loan, and a credit card, can have a positive impact on your credit score. But, of course, you still need this to be under your utilization. Now, if you basically have like a whole bunch of mix of credit, what you really need to do is make sure that the amount of credit that you have is very low compared to the amount of money that you actually make, right? Not the money that you actually have, but the money that you actually make. Because a lot of these companies don't even care about how much money you have in the bank. Like, you could literally have $1 million in the bank, cash, and they would still force you to jump through hoops to get like a mortgage, right? Whereas if you had proven income for like past 2 years of a certain amount compared to how much debt that you actually have to your name, you would potentially easily get a home compared to the person that has $1 million in cash but literally no credit history. Like, it's kind of a pain in the butt way that is, but it's just something to think about. Now, you could still technically get a mortgage without having to go through the process of getting a credit score, meaning you could technically skip the perfect credit score and literally just never use credit and always pay cash for everything. You could do that. You're just going to have to deal with a little bit more hassle. And if you want to go down that route, that is perfectly fine. By the way, if you want to learn how to get out of debt, go down below and learn how I got out of debt and grew my net worth, or go to 40inbucks.com. But here's the thing. A credit score, like a perfect credit score, if used correctly, could make things a lot easier for you in terms of what will come like available to you. But a average or very bad credit score can make things a lot more of a hassle, make things far more expensive in the long term, and basically you might even get treated worse as like a human being, which is a really sad situation. Like, here's the thing. If you have a really good credit score, you could get a mortgage for a house at a very low rate. Even if they're raising rates, you still might be able to get a deal. You'll also be able, if you go down the route of buying a car on a loan, you could get a car loan for very low. I would never suggest someone to actually go get a car loan, but I want to express that by having good credit, every aspect of financing is a lot easier on you and a lot cheaper on you. But also, financing isn't really a good option for the majority of people because a lot of people mishandle money, mishandle financing. And I have met a lot of people with really good credit scores, but not much money to the name because they basically financed their whole life. So just because you could get a perfect credit score does not mean that you actually have money. All it really means is that you are very good at utilizing other people's money. That's all it means. It doesn't mean good or bad. It just means that you're good at managing other people's money, which is kind of a messed up thing when you really think about it. Like, Okay, so you're able to manage other people's money better than you can manage your own because now you're basically forced to pay them a return. Like it's a pretty horrible way when you really think about it. So just keep that in mind. If you want to get a perfect credit score, this is basically what you're going to have to do. But again, having a perfect credit score does not mean that you are wealthy and does not mean that you'll become rich. All it means is that financing is going to be easier on you and things might just be slightly cheaper long term. But everything's cheaper if you just pay for it in cash. FYI.